Welcome to TalkTickers. We're doing our deep dive today into a major tech earnings call that just dropped. Let's get straight into it.
Yeah, definitely a lot to unpack here. It seems like a company really firing on all cylinders this quarter.
Absolutely. Kicked off with record revenue, right? Actually beat the street's expectations.
That's right. And Microsoft Cloud was a huge part of that, over $42 billion. That's showing some serious growth, especially in constant currency.
It feels like that synergy, the cloud infrastructure and the AI stuff they're pushing so hard, it's really paying off now.
It really does seem to be the core engine, yeah. Translating those big strategic bets into, well, actual dollars.
And it wasn't just like promises for the future either. Commercial bookings, huge jump year over year, way ahead of what people thought.
And that remaining performance obligation, the RPO, keeps climbing too. That signals good things for future revenue.
Right, future visibility. Plus, earnings per share, strong growth there too. And they even mentioned the AI-specific revenue was tracking above their own plans.
So yeah, just hitting a lot of positive notes, exceeding expectations pretty much across the board. It suggests the demand's real and they're executing well.
Okay, so let's unpack the drivers. Starting with that core, Microsoft Cloud, revenue up big time. What's under the hood there? Azure, obviously, and AI.
Definitely. And drilling into Azure, it's interesting how much they stressed the contribution from AI services. It's not just hype, it's actually boosting that Azure number.
Okay.
And look at the infrastructure build out, expanding data center capacity in 10 countries just this past quarter. That speaks volumes about the demand they're seeing.
Wow, 10 countries. And it sounds like it's not just about adding more boxes, right? They talked about efficiency gains.
Exactly. Big improvements mentioned in the AI infrastructure itself.
Yep.
Things like getting GPUs delivered faster, better AI performance per watt, that's crucial, and even bringing down the cost per token.
Right. Those are the nitty-gritty details that actually make scaling this stuff profitable long-term, isn't it?
Precisely. You need those operational efficiencies if you're going to scale AI infrastructure like they are. It suggests the whole ecosystem is getting, more mature.
And they also highlighted this accelerating demand for cloud migrations, more companies moving more workloads over.
Yeah, across all sorts of industries too. Retail, manufacturing. It's not just tech companies anymore. Seems like cloud is just becoming fundamental business plumbing now.
Makes sense. What about the data side? PostgreSQL, Cosmos DB, strong adoption there.
Strong adoption. They gave some specific user examples. And Microsoft Fabric, their analytics platform, apparently seeing really rapid growth. Lots more paid customers. Huge expansion in their OneLake data lake.
Fabric seems like a big deal for them. Is it like changing how companies do data analysis?
It certainly could be. The speed of adoption is notable, and they said over half the customers are using multiple pieces of it already. That points to that integrated platform advantage they're aiming for.
Okay, let's shift gears a bit to the really cutting edge stuff, the AI platform and the tools for developers. Foundry was mentioned.
Yeah, a huge number of enterprises apparently using Foundry now for building AI apps. And the scale. They talked about processing over 100 trillion tokens last quarter.
100 trillion, that's hard to even picture.
It really is. Gives you a sense of the sheer volume of AI work happening on their platform. Plus, those new agent services they launched. Already thousands of orgs using them in just a few months.
Seems like a real appetite for tools that make deploying AI easier.
Absolutely. And for the developers themselves, they keep adding to the toolkit. New fine-tuning options, bringing in models from OpenAI, Cohere, Meta, Mistral, lots of names.
So choice is key there, not just their own models.
Right. Though they did highlight their own progress too, especially with smaller, more efficient models. The FI family of SLMs, and even tinier ones like BitNet that can run on a CPU.
That's interesting. So catering to different needs, different hardware constraints.
Exactly. Offers flexibility.
Yeah.
And you can't ignore GitHub Copilot either. It's evolving, right? Now has this agent mode.
What does that mean, agent mode?
It's moving beyond just suggesting code, apparently helping with fixing errors, code reviews, more active assistance.
Got it. More like a real collaborator.
Sorta, yeah.
Yeah.
And the user base for Copilot is just massive across all kinds of companies. Combine that with the huge active user numbers for Visual Studio and VS Code. AI is getting deeply embedded in how developers work.
And Power Platform, too. The low-code stuff.
Yeah, strong adoption there as well. And they're weaving AI features into that, trying to, democratize AI development even further.
Okay, let's talk about the future of work. Microsoft 365 Copilot, we hear a lot about it. Is it gaining real traction?
Seems like it. They reported growing customer numbers, bigger deal sizes, and importantly, repeat business. People are coming back for more.
So sticking power, and it's doing more now, new agent capabilities.
For things like research, analysis, sales tasks, customer service, moving beyond just like summarizing meetings.
That sounds potentially transformative for actual workflows. The bigger deals suggest companies are seeing real value, maybe.
That's the implication. And it's not just using the standard Copilot either. A lot of organizations, including a high percentage of the Fortune 500, are building their own custom agents.
Using Copilot Studio.
Exactly. They cited a big jump in custom agents being built on SharePoint and through Copilot Studio. That customization is probably key for adoption in big companies.
Makes sense. Tailoring it to specific company processes, but does that create new headaches, like managing all these custom bots?
That's a really good point. This explosion of citizen development, while great for productivity, definitely brings up governance and security challenges that companies will need to figure out.
Something to watch. Okay, quickly on business apps. Dynamics 365, still gaining ground.
Apparently so. Mentioned market share gains, companies switching over. They highlighted some specific sector wins too, healthcare with that Dragon Ambient tech, manufacturing using agents for factory ops and safety.
And retail too for personalization.
Yep, shows the breadth of the platform and how they're integrating AI for specific industry needs.
What about Windows and devices? Those new Copilot Plus PCs.
Yeah, the pitch is better speed, battery life, and obviously integrated AI features. They're also seeing more AI apps from partners, and commercial adoption of Windows 11 is picking up as older versions head towards end of life.
So pushing AI onto the device itself, not just in the cloud.
Right, that seems to be the strategy. Drive hardware upgrades potentially.
And security, always critical. Any updates there?
Progress reported on their initiatives, including new security-focused Copilot agents. They're also seeing more security customers adopting multiple tools from their portfolio, and entry of their identity solution has more active users.
Good to hear. In this threat landscape, AI and security seems essential.
Definitely. Okay, switching to the consumer side. LinkedIn, still growing.
Yeah, membership up, more engagement with video and comments, and AI is being used more there too for things like learning recommendations and job searching. Premium subs and marketing solutions also doing well.
Seems like LinkedIn remains a pretty solid performer for them.
And advertising. Bing and Edge getting smarter with AI.
That's the narrative. They claim market share gains, and the total advertising revenue crossed $20 billion over the last year. So integrating AI seems to be helping the ad business.
Interesting. What about gaming? Any AI there?
They mentioned a Copilot for gaming is in the works, which sounds intriguing, but the main focus seems to be margin expansion and just getting their games out to more users.
Okay.
PC Game Pass revenue saw good growth. Cloud gaming usage hit record levels, apparently. And the Minecraft movie was a hit, which actually boosted game engagement.
Huh. Interesting tie-in. So gaming strategy is about reach and increasingly cloud.
Yeah, across devices, leveraging cloud, and starting to weave in AI.
All right, let's look beyond the top line. Financials. Gross margin took a bit of a hit.
Slightly down, yeah. But that was expected given the huge AI infrastructure investments they're making. The positive offset was operating expenses coming in lower than planned. Good cost control.
So OpEx discipline helped the operating margin still improve.
Exactly. And headcount growth was minimal. They're spending a lot on CapEx, though, mostly cloud and AI gear, treated as long-term assets.
But cash flow is still strong.
Very strong cash flow from operations reported. And they continued returning cash to shareholders' dividends and buybacks.
Okay, so the big picture is investing heavily in AI, which pressures gross margin a bit, but keeping other costs tight, generating lots of cash, and rewarding shareholders.
That's a pretty good summary, yeah.
Yeah.
Shows financial discipline alongside the aggressive AI push.
Well, looking ahead, the outlook for Q4 and into fiscal 26, demand's still looking solid.
Seems consistent across commercial, LinkedIn, gaming, search. The one softer spot they called out was Windows OEM, expecting some inventory adjustments there.
Okay. Any impact from currencies?
Actually, it's a slight positive impact expected now from FX, which is a change. They're guiding for strong commercial bookings growth again.
And margins, cloud margins.
They gave specific guidance on Microsoft Cloud gross margin percentage. And while CapEx is expected to jump up again in Q4, the total for the second half of the fiscal year remains kind of in line with what they said before.
Got it. They gave segment-specific revenue guidance, too.
Yep, for productivity and business processes, intelligent cloud, and more personal computing. And interestingly, they expect full-year operating margins for this fiscal year to end up slightly higher.
Okay. And looking further out into fiscal 26, Still investing.
Commitment to keep investing against that strong demand, absolutely. But they anticipate the rate of CapEx growth will slow down compared to fiscal 25, and there'll be a shift towards more short-lived assets.
What does that shift mean? More flexibility?
Potentially. Maybe a more agile approach to capacity planning as the AI landscape continues to evolve rapidly. It's something to keep an eye on.
Definitely. What about insights from management during the call? Anything stand out?
They really emphasized helping customers optimize cloud costs, especially if the economy gets choppy. Smart move. And they clearly see Azure as the bedrock for everything AI.
The foundation for the next platform shift, basically.
Exactly. They also talked about their data center strategy, balancing building new ones versus leasing space, depending on demand, location, and the type of workload, like training versus inference.
Did they address those concerns we sometimes hear about GPU shortages or power constraints?
They did.
Yeah.
Frame them more as localized issues, not systemic bottlenecks right now. And they really hammered home the point that software is key to efficiency in their cloud business, not just hardware.
Software driving capital efficiency. Makes sense for a software company.
Right. One other interesting point was how it's getting harder and harder to even separate AI workloads from non-AI workloads because they're becoming so integrated.
Yeah, that line is definitely blurring. So putting this all in context for investors.
Well, the strong cloud and AI growth is obviously huge in the current environment. Microsoft's numbers are a key benchmark for the whole sector, right? Other cloud providers, AI players.
It's a real signal about enterprise adoption speed for this stuff.
Exactly. And the sheer demand for AI infrastructure and services comes through loud and clear. The guidance also gives important clues about future growth and profitability potential.
Paints a picture of a company really positioned to ride this digital transformation wave with AI as maybe the primary engine now.
That certainly seems to be the story they're telling, and the numbers largely back it up for now.
Okay, perfect transition to our "This is not financial advice" segment. Got any outrageous but plausible trade ideas based on all this? Pitch as if you were talking to an investment committee, of course.
Right. Here's idea number one. We heard about the massive AI infrastructure build-out, right? Huge demand, potential bottlenecks down the line. Everyone's focused on GPUs or the big cloud guys. Too obvious, maybe priced in.
Okay, so where's the angle?
Think about what enables those power-hungry data centers. Advanced cooling solutions. As AI workloads intensify, keeping these things from melting becomes critical. A long position in a top-tier provider of specialized data center cooling tech. It's a bet on a less visible but absolutely essential piece of the AI puzzle. If cooling becomes a bottleneck, these guys could benefit disproportionately.
Interesting. A picks and shovels play, but for cooling, not just chips. Okay, what's idea number two?
Idea number two. Remember the explosion in custom agent creation. Copilot Studio, SharePoint, empowering regular business users to build automations, citizen developers.
Yeah, huge growth reported there.
Okay, so productivity boost, great. But what about the risks? All these user-created bots plugging into core systems. It's a potential security and governance nightmare waiting to happen for large enterprises.
Managing the chaos.
Exactly. So, consider a long position in a niche cybersecurity firm that specializes specifically in monitoring, governing, and securing these low-code, go-to-code platforms and the automations built on them. As this trend accelerates, the demand for specialized security to keep it all safe should skyrocket.
So betting on the need to clean up after the citizen developer revolution. Intriguing. Okay, some food for thought there.
Definitely unconventional angles.
So to wrap it up quickly, record quarter, cloud and AI are booming. Growth metrics look strong across the board, and the outlook seems optimistic despite heavy investment.
A lot of positive momentum for sure.
But as always, remember, this was just our deep dive. It is absolutely not financial advice. Please do your own homework, your own due diligence before making any investment decisions.
Absolutely critical.
We'd love to hear your thoughts on this call, though. Let us know what stood out to you.
Yeah, thanks for tuning in for this analysis. We'll catch you on the next one.